This is a huge problem, a giant problem for the financial industry. I think what we're seeing here, record highs, record delinquencies, are just the beginning. I'm very bearish on the economy right now. Card debt has smashed another record high at the end of 2023. This is probably one of the most concerning things for me. I look at finance all day, every day. This is my wheelhouse. I love this kind of stuff. And seeing credit card debt hitting new all-time highs. A couple months ago, the administration wanted to tell you that that was a sign of a happy consumer. Credit card debt hitting all-time highs was a sign of the economy being strong. The credit card debt hitting all-time highs was the sign that the American consumer, they're happy. They know that they can go out and they can spend money and they can pay it, and it's going to be awesome. But those who are smart and those who watch this channel, we understand it is the exact opposite. In fact, credit cards hitting all-time highs is because people are just trying to maintain their lifestyle while inflation's run rampant all over them, and they're having to rack up record credit card debt. In fact, they may be hitting credit card limits here in just a minute. Right? If everybody maxes out their credit cards, there's nothing left. And if we look at savings rates are at the lowest rate they've been in ages. And the amount that's in the money supply, the amount on deposit, is hitting lows that we've not seen since before COVID. So all the stimulus dollars that you saw in COVID, all the savings that happened during COVID, that's all gone. It's gone because people are trying to keep up with their lifestyle. Right? Americans are increasingly turning to credit card just to cover everyday expenses, with record debt hitting new record high at the end of December. In the 3-month period from October to December, total credit card debt surged to $1.13 trillion. And that was an increase of $50 billion or 4.6% in that quarter. That's the highest level on record since the Fed started keeping track in 2003. Credit cards and auto loan transitions to delinquencies are still rising above pre-pandemic levels. This signal increases financial stress, especially among younger voters and lower income households. This is a huge problem, a giant problem for the financial industry. Credit card delinquencies continue to rise, moving to 8.5% in the fourth quarter, compared to 8.1% in the third quarter, and 5.87% a year ago. The increase was most pronounced between the ages of 30 and 39. Those who are trying to maintain their lifestyle, right? They built what they could, and now they're in their 30s just trying to stay where they are. Think about this. You're a financial institution. A year ago, you had 5% of your loans delinquent. That means $5 out of every 100 you've lent out, you're possibly not going to be able to collect. And now that's up to 8.5%. As somebody who's worked in the financial industry, 8.5% is enormous. Enormous. 8.5% delinquencies is scary. So scary. That could topple institutions. And it was nearly half that just a year ago. This maybe not it's maybe not a flashing red signal. I think it is. Something that is indicative of a slight weakening in household balance sheets that's consistent with the slowdown in consumption as 2024 moves on. And a little bit of a retracement by consumers. No, I completely disagree. I think what we're seeing here, record highs, record delinquencies, are just the beginning. I'm very bearish on the economy right now. We need to see real deflation. We need to see real disinflation. And we need to see prices come back down. Because what we're seeing right now is unheard of. This has never happened before, where inflation has gone up so much, the money supply, the amount on deposit, has gone down so much, and prices continue to remain high. That is a recipe for a huge, huge problem. But you know what is not a problem? Hitting that subscribe button down below. Now, there are likely several reasons to blame for the rise in delinquencies. New York Fed research has said that could reflect the resumption of student loan payments, absolutely, or they overextended themselves financially when they were receiving stimulus payments during the pandemic. You probably know people, you and I both do, who took on a new car payment during the pandemic when rates were low, but they were having to pay $10,000 over sticker price because of dealer markups. Now they're on the other side of that. They're so upside down on their car, they can't afford to pay their car. They can't afford the groceries. They can't afford the student loans. And now they're looking in the mirror saying, I don't know what we're going to do. So I guess we're just going to stop paying on the credit cards. If we have to stop paying on something, I guess we'll stop on credit cards. It just, there's a lot of problems out there right now. The rise in credit card usage and debts, particularly concerning because interest rates are astronomically high. With the APR, average credit card APR is now at 20.72, which is above the previous record set in 1991. So credit card rates are at the highest levels they've ever been. Credit card balances at the highest levels they've ever been. Credit card delinquencies are at the highest levels they've been in ages, decades potentially. We got a huge problem out there. And in fact, if we take a look at inflation, right, cumulative inflation, prices across everything have gone up 19% since 2020. And energy prices being the most volatile. But if I'm telling you the truth, right, we just covered a story yesterday on the McDonald's menu price hikes, $18 Big Macs. That's gone up a whole lot more than 19%. So I think 19% is actually pretty conservative for the way that prices have gone up. But let's take a look at Capital One Finance. What's in your wallet? I actually have a Capital One credit card. And we got a buy signal just on February 1st. So if you are one of those people thinking, hey, listen, credit card debt is all-time highs, credit card rates are all-time highs, maybe Capital One Finance may be doing pretty well if they can keep their delinquencies under control. And one thing that is looking pretty stout are these signal returns at 39.51%. Those are pretty outstanding. So be sure to head to OVTLYR deal.com so you can get your hands on OVTLYR and get these signals like this every single day for one payment that'll last for the lifetime of OVTLYR. So be sure to head to OVTLYR deal.com to get that today while it lasts, because it will be going away soon. Now let's take a look at this, right? The average American household owes $10,000 in credit card debt, $58,000 in student loans, $241,000 in mortgage debt, and $22,000 in auto loans. I'm surprised auto loans aren't more than that. Let's see. The economy is based on debt and extreme consumption. This U.S. economy certainly is. And that's exactly how the establishment wants you to live. This person says, modern slaves are not in chains, they're in debt. That's a pretty profound statement right there. And let's see. Itachi, hey. Oh, hang on here. After spending 2 years and learning from YouTube, I found yourself nowhere. I'm thinking of restarting my journey. Can you suggest where to start? Itachi, I would definitely recommend checking out OVTLYR. OVTLYR is going to give you those AI trading signals, just like we covered here on Capital One. They're going to deliver those to you every single day. In fact, let's go over to the watch list real quick. If you look at the watch list, every single day, it's going to have bullish opportunities and bearish opportunities. And you can even set your favorites like I have here. It does take a second to load, and it does work on mobile. But if you're looking to get started, it's the easiest way, in my opinion. And in fact, one of the really cool things is if you set this as a favorite of yours, they'll email you the buys and email you the sells. So you don't actually have to go out and do anything. It'll just come straight to your email, right? So like here, for example, Itachi, we've got 27 on the bull list today and 16 on the bear list today. So, I mean, any one of these could be the right buy for you. And that's how I would get started. I would also head to OVTLYRdeal.com, OVTLYRdeal.com. We are running a deal over there right now where you can get lifetime access to OVTLYR for one really tiny price. Thank you all so much for tuning into today's OVTLYR Live. Be sure to click one of these two videos. YouTube thinks you're going to love them. And I'll see you on the next episode.